We ended up continuing to stay in touch with EVP, came back to them 9 months later, and we'd just done most of what we said we were going to do, and the business was growing really quickly. And they were, still like, oh, this is not really us and a little bit scary. But, they went out on a limb and took a chance and invested in the business. And very, very soon after they invested in the business, COVID hit, and we were really facing the worst case scenario that the business could possibly face, essentially.
Hi everyone, I'm your host Rohit Bhargava, and you are listening to episode 214 of the Startup Playbook podcast, a weekly series where I sit down with successful tech founders, investors, and operators to unpack their journey, lessons, and insights to help current and future entrepreneurs. Our guest for this episode is the co-founder and CEO of EatClub, Koutlakis. EatClub provides a dynamic pricing model for restaurants to help them fill up capacity during off-peak hours while passing on great deals to their customers. They had incredible growth early on, which came to a standstill, and revenue went to zero when COVID lockdowns hit. Pan then restructured and realigned the business and recently led them to an impressive $18.2 million Series A funding round. In this episode, we covered a wide range of topics, including how he convinced industry heavyweight Marco Pierre White to come on board as a co-founder, navigating the uncertainty of COVID, the power of setting ambitious targets, Pan's framework for making strategic long-term bets, and much more. Without further ado, here is my interview with Koutlakis. Hi Pan, welcome to the Startup Playbook podcast, and thanks so much for taking time to be on the show today.
And not at all. Thanks for having me, and I'm excited to be here.
Likewise, I know you flew in for this, but I've been very excited for this chat. But Pan, for those people who may not be as familiar with you and your background, do you want to share a little bit about your story and what got you here today?
Yeah, sure. I grew up in Adelaide in South Australia, which probably until more recently isn't super known for its startup scene. I went to school down there, studied law and economics at Adelaide University, and throughout all that time from a very young age was kind of very ingrained in the hospitality scene, working in a cafe from when I was very young, probably 12 or 13 years old, and then bars and nightclubs through my university days, and was the general manager of one of the busier nightclubs in Adelaide for 3 or 4 years while I was studying, which is where a lot of my background, both in management, deeper hospitality stuff, but then also was always trying to come up with little ideas and schemes during that time as well, and was always very keen to get into the world of business and eventually start my own business.
Yeah. I mean, first of all, I think Adelaide's a really underrated town. It was the first place that we sort of landed in when we first moved to Australia when I was 5. I grew up, I say kind of Canberra is the closest thing I have to a hometown. I moved around a lot, but I imagine Adelaide's quite similar in that there isn't really much of a startup scene, especially when, I imagine you were going through uni. And so what was that like in terms of, you said, you were always sort of entrepreneurial. Where do you think that came from, and what did that sort of look like in a town like Adelaide?
It's a really good question where that came from. Wherever it came from, it started very early. Like even in primary school, I was going around on the weekends cleaning people's windows and cars for money, and just always wanted to kind of be out there and engaging in business in some way. I don't have a very business-oriented family, to be honest with you. And also not a very risk-taking family, I would say as well. So a question that I probably should have been prepared for, but I have no idea exactly where it started, but it's definitely been there from a very young age.
What did your parents do?
My mum was a nurse and my dad was a mechanical fitter, boilermaker.
Okay. And so I spoke to a couple of people in the research process for this interview. One of them was Dave, who I believe you started a business with at uni.
Yeah, correct.
Yeah, do you want to share a little bit about what that was?
Yeah, so we were both working in bars at the time, 2010, 2011. And we were working in bars. It was kind of when all of the small batch distilleries started popping up. Lots of new craft beers were popping up. And we were so ingrained in the bar space. That's all we were, it was where we were working, where we were hanging out. And I guess we just kind of wanted to get involved in that in some way. And we thought the best gateway to that would be setting up a small batch bitters company, which we did. It was called a Gentleman's Tonic. We created one bitters product that we ended up selling and getting some distribution for, and we were in the process of finalizing the formula for a second one. And it was a pretty wild ride. I don't know how we possibly got accredited to be alcohol producers in Australia. We just went through this very arduous process of creating documents, sending them into, the biggest thing we had to do actually was we had to get approved for an excise exemption from the ATO. And I have no idea how we pulled that off, but we just created a bunch of documents. We're calling them every day, asking how our application was going. And then one day we were suddenly approved to be alcohol producers in Australia.
Yeah, he did mention that you guys went through this whole process, like you said, to get approval to sort of create alcohol and things like that. But then he said you guys didn't really see the traction that you were sort of hoping to see, and given that you were sort of coming to the end of uni and trying to sort of figure out what you should do next.
Well, yeah, not only that, we kind of did a lot of work starting the business up and starting to produce it. But as we had a final product that was produced and bottled, I'd just got a job in Sydney. David just got a job in Melbourne. And the last couple of weeks of that process of getting our products stocked in distributors, we were flying in and out one at a time. So we'd like designate which weekend someone was going to be back in Adelaide to either continue bottling, pitching to distributors, etc. So yeah, I would say although that, yeah, we kind of ended up not having enough time to pursue that in a big way, that process is still one of my fondest memories of anything in business, really. Just like absolutely flying by the seat of our pants, not knowing what we were doing, but kept getting ticks of approval here and there and continuing the process, which was awesome.
Yeah, totally. And I feel like that's something that probably a lot of people listening to this show can relate to a lot of the time, especially with your first business. I feel like no one really knows what they're doing. But he did also tell me about, like, I guess how you guys first started working together, which was, I think he was saying you were a bartender at a bar, and the bar itself was kind of going under or wasn't really making money. And I think you kind of pitched the owners, who were like the family owners of the pub, that you were convinced that you could turn it around and that they needed to make you the GM.
Yeah. Some slight mayo on it, but the business was still a fine business. But I did go in and pitched all the areas that I thought we could really improve and do a lot better on, and they ended up giving me a shot. I'd been working there for maybe 6 months. I moved from glassy to bartender, and yeah, I gave them a big pitch, and I was promoted to general manager there, which was an incredible experience. I'm still really good friends with that family, and very thankful for the trust that they gave me. But yeah, that was an awesome experience. Like my first full P&L management of a business, managing staff, hiring staff, managing the expenses, and also the whole marketing side of the business as well, trying to grow the business and get revenue to the point that it needed to be at.
Do you remember what the pitch was?
I think there was a lot of different things that I thought we could do. I mean, whether or not this was in the initial pitch, I think the most impactful things that I did was got some planning permission to increase the capacity of the venue. I mean, very early on, I learned that the ability for a night venue like that to make money really depended on not only being busy, but like how many people you could fit in there at one time was really important. Like there's some venues that are look really busy on the outside, but sometimes just don't have enough capacity, full stop, to really make enough money.
Yeah. And I guess from your perspective, were you very intentional? Like you said, it gave you so much exposure into so many different parts of the business that you probably wouldn't have had without that. Was that a very intentional thing from you, from wanting exposure and wanting to kind of learn that? Or again, what was the desire to put yourself in that role, or kind of push yourself with this pitch?
No, I really think it was. I was coming from a position where I didn't really have any connections in business. I didn't have a family that was, that just wasn't a lane that we had as a family. So I think I really thought that what I needed to do to progress and move forward was to try and gain some experience that other people might not be able to gain at that age. And I was pretty driven towards that.
Mm. And so what did the sort of next step look like? Because I believe that you worked at supper time.
Yeah, I did. Yeah. So that was my ticket out of Adelaide. A mate of mine, also from Adelaide, had done some study at Columbia in New York, and through that got a little bit exposed to parts of the startup space that I'd never heard of in Adelaide, and he got an internship with Rocket Internet, and through that internship understood this opportunity at Supper Time, and Supper Time, for people that don't know, was actually a business that was around, I think, till from the late 80s, but it turned into the first last mile food delivery player in Australia, before Deliveroo, before Uber Eats. So when we had sort of businesses like Menulog and Delivery Hero, people could order food online, but then the restaurant would deliver that food. So the only restaurants that could be listed on these platforms were restaurants that did their own delivery. The pitch for Supper Time was that there are a lot of great restaurants that people would love to eat their food at home, but they don't have a fleet of delivery drivers and So yeah, it really started like there were cars driving around. They had walkie-talkies communicating to those cars, trying to tell them where they had to be at different times. It sounds crazy with how far that space has now gone today, but yeah, it all started with very, very offline ways. So through that connection, Rocket Internet had just acquired this business, Suppertime. I, through my friend who had the internship at Rocket Internet, got me an interview. The interview went well enough to get a job, and I flew to Sydney probably a couple of weeks later and started as head of sales in that business.
Yeah. And what was that experience like for you? Because again, I feel like intentional or not, you can see all of the dots sort of joining into what EatClub is now. But yeah, what was that sort of experience like in kind of building out sort of Suppertime, and what are some of the things that you've sort of taken away that you sort of now apply to EatClub?
So many things that I've applied to EatClub, and also so many lessons where you really learn, like, that's maybe not the way to go about things. I mean, it was the classic Rocket Internet story. They bought it. They didn't know heaps about the Australian market. Fortunately, the founders that they bought it from are really good operators. They've had lots of success since Suppertime as well. A lot of money poured in really quickly. Just the classic Rocket Internet scale-up experience, which is growth at all costs, operations lagging very far behind. And this was an operationally heavy business. This was a last mile delivery business. So we were really hiring as quickly as we could, putting in processes as quickly as we could. And it was truly a wild ride. Like, the growth in that business was huge for a very long period of time, which was awesome.
Well, like, out of curiosity, what were some of the things that you're sort of mindful of not carrying over to EatClub now?
Yeah, I think like the growth at all costs is obviously one. Like, we were building a business that was growing really quickly, but it was always hard in delivery to really see how the economics were going to stack up at the end of the day. And there was much more focus on getting another order in than making the orders that we already had, or the customers that we already had, profitable on a unit economic basis.
Yeah. And so what was the catalyst behind starting EatClub originally?
Yeah, it's a good question. So it was at a bit of a fork in the road for me. So our managing director at Suppertime had actually since been bought by Delivery Hero. Rocket Internet sold it to Delivery Hero, and they'd now rebranded it what was a global Delivery Hero brand called Fedora. It's the pink. We went from a red Suppertime to a pink Fedora. Our managing director had decided to take another opportunity in the group in the Middle East, and I'd been effectively selected for the opportunity to be the managing director of the business in Australia. At the exact same time, the founders of Suppertime that had since left the business had met these two people that wanted to start a business in the food space, but didn't have a lot of experience in the food space, but had the money to get something set up. That was my co-founders, Ben Tyler and Matt Cantello. And by a pretty chance encounter, they connected us. We got along and decided to do it. They already had some ideas about what they wanted to do in the space, something around offers and getting people into restaurants. And I was able to apply some of the ideas I had after seeing not only what happened in the delivery space, but also just the experience in hospitality that I'd had for so many years before. And EatClub was born.
And I believe one of the other people that were sort of involved very early on was Marco Pierre White. For anyone who is a foodie or kind of like follows MasterChef, he's usually one of the judges on there, or I guess like one of the people that kind of comes in for cameo appearances and those sort of things. In previous businesses, I've kind of been involved with sort of bringing on athletes or just other people there. And I think there's just a lot that you can get from having people with industry connections or some form of credibility that you can sort of lean on to help you in that way. First of all, how did that sort of come about, and what did that sort of mean for you guys even at an early stage for the business?
Yeah, firstly, how it came about was really, again, just putting ourselves out there and cold emails. Ben sent a bunch of cold emails out to a bunch of chefs, all of the classic ones that probably come to mind: Gordon Ramsay, Jamie Oliver, and Marco Pierre White's management got back and said there was some interest in exploring it. Yeah, we met and then pitched the idea and got him involved from there. It meant a lot of things for us early on. I think we really built the EatClub model around helping the economics of restaurants through. It was really around a quite counterintuitive idea, and that was that there is a lot of margin in food. The food cost for a restaurant often can be anywhere from 20% to 30%, sometimes a little bit higher, sometimes a little bit lower, depending on the type of food and the price point of the food. But what our sort of contrarian view was that there's enough margin in restaurant food a lot of restaurants don't do enough volume to make enough money at the end of the day. And how we were pitching to restaurants that we would help them is, what you can do is you can lower your prices at certain periods of time, of certain times of the day. That would incentivize additional demand. And because the additional demand would be so much greater than what you got previously, you actually make more contribution at those times than less. But to someone that isn't as familiar with dynamic pricing, you might be thinking, I give a discount away, I'm actually going to be making less money than I made before. I might be losing money. There's a lot of education that we knew needed to happen through the process of starting this business. And there was also a little bit of stigma that we had to correct as well from models that had come previously, particularly around the Groupon model and the group buying model, where restaurants effectively sell thousands of tables into the future at a steep discount, really more as a marketing play rather than a dynamic pricing play. And so we knew we'd have to overcome these hurdles in some way or another. And so having someone like Marco Pierre White, who understands the business and is able to communicate the business, was a huge help early on with just building trust with restaurants, legitimacy for our business that was really small and new at the time. And there was a lot of buy-in from him. He really got it from the start and still does. We had him in Australia just a couple of days ago, I think. Yeah, started last week, doing some filming and getting his updated views on everything.
Yeah. Obviously, I want to sort of come back to especially that sort of trust and credibility piece in building out your sort of first few customers onto the platform. Yeah. But specifically talking about the situation with Marco Pierre White, I think we've kind of both experienced, I think having someone like that, like you said, on the trust credibility front is so helpful for a business. I think it can be really hard, especially for people that maybe don't necessarily come from a tech or startup background in that way, to understand how to structure the deal specifically, or how to make this in a way that is beneficial for the company, beneficial for them, but also not limiting to you in terms of, someone having, for example, a huge chunk of equity in the business without them necessarily sort of being involved in the day-to-day growth of that, which has a bunch of downstream challenges when it comes to fundraising and those sort of things. But what, again, any insight or advice, you don't need to share exactly what that sort of, what you have with Marco, but any advice in terms of how to think about or structure those type of deals?
Yeah. I think all the points you raise is valid. And it's really about the value that you think that person's going to bring. And then of course, what you have to give away for it. I don't think we necessarily structured our deal in the optimal way. But what I'd say is you don't have to structure it once and it's like that forever. There's been periods of renegotiation. We've had to, we had the periods through COVID where our business was really doing it tough. Dining was effectively, lockdowns prevented you from being able to dine into restaurants. That was a lot of our revenue gone really overnight. So we had periods of time like that where we've had to restructure the deal. We've now going through a huge period of growth and moving into new regions. We're restructuring the deal, or have just restructured his deal quite recently. So you got to be conscious of it. It's also, they're never going to be a silver bullet either. Having a celebrity on board or a famous athlete is never going to make a product work just by virtue of having them on board. But it can be, that little bit of secret sauce that you need to get started at the beginning. So it's worth exploring. Yeah, just be sensible with it, I think, and not think that it's going to totally change everything overnight. Only give away what you can. And I think as well, depending on where the startup's at, equity and cash, and when equity is more valuable to your business and when cash is more valuable to your business, kind of flips and changes all the time. And it's not only cash is really valuable at the start, equity is really valuable at the end. There'll be fluxes throughout the life cycle of your business where you've got plenty of cash or you don't have plenty of cash and you still want to have some leverage and be able to do some things with different people.
Yeah. So coming back to the early days of EatClub and trying to sort of build that momentum. So my mum had a restaurant and cafe in Canberra, and I know that I guess a lot of restaurants or restaurant owners are generally not necessarily tech savvy in that way as well, especially when it comes to the long tail of restaurants. And I imagine, especially from a platform like EatClub as well, you want to try and attract high quality restaurants because those are the ones that people want to go to, and it's just going to kind of feed into the flywheel for the product as well. What does that look like in trying to convince the first few people to come on? Obviously, having Marco there is extremely helpful in opening doors and kind of leaning on his credibility, but was that a struggle in trying to convince people of this new way of them sort of operating their business and the dynamic pricing that wasn't really introduced into that type of industry before?
It It wasn't a massive struggle, quite surprisingly to everyone involved at the start, I think. The story that I tell often, and it's like, it probably sounds like a fake story. It's a totally real story. We decided we were going to go for it. We hired our first few salespeople, and we got a little office space on Chapel Street in the Como building there, like a tiny, I think it was like a 4-person office, and we were cramming a lot of people in there in the early days. And we all sat down to do like the first cold call pitching practice, which was half a training, half us sitting down and trying to formulate what the pitch was going to be from the beginning. And so I put my hand up and I said, I'll do the first one. Let's all listen in. It was on loudspeaker. Let's see how it goes. We called up this restaurant, a Mexican restaurant that was just around the corner from the office. And it sounded like a totally set up phone call because he's just like, oh, I can do that. Oh, I've been waiting for someone to make a business like this. Oh, yeah, great. Yeah, come see me today. Yeah, okay, cool. Yeah, awesome. And we ended up signing that restaurant up that day or the next day. So
wow. Literally
the first one we called. When I think about why it kind of worked from the start, it was pretty purposeful. We took something that was a problem for restaurants that had been, people had attempted to solve this before, but just not, I think, with the insight that we came at it with. And that was restaurants are more than happy to create offers if they've got the flexibility to create the offer that they want to create and they've really got full control of it. And our MVP allowed restaurants to create an offer as granular as you can have 30% off your meal if you're here in the next 30 minutes or 60 minutes, and limit the number of tables that you're able to come on by. And they just hadn't seen that level of control before. And I think that's what really allowed us to stand out early. And probably we've taken that, I guess that philosophy, which is if we're going to build something, let's build something that is a lot more innovative than what's been there before. It's probably a lesson actually from the Suppertime Fedora days. Once that space got competitive and everyone just had the same product, it just becomes a pretty shit race to be involved in. Now that we've kind of got our own product strategy and get to build whatever we want, it's always a lot easier if you spend a little bit more time and think about, if I'm going to build this, what's that 1 or 2 steps further I can go to make it truly unique and something that people haven't seen before.
And you referenced hiring your first few salespeople, one of who I believe was Jonty Shaw, who I also spoke to. And one of the things that he mentioned was just, he said that you're like a little bit of a classic founder, like just, big visionary, but also just a little bit unreasonable and unrealistic with some of your approaches with things. One of the things that he kind of mentioned was, I think in the early days of EatClub, you guys used to sort of send invoices out to restaurants and then a bunch of them just like wouldn't pay. And then, I think you guys sort of tried to solve that around from like a product perspective. And then, you'd kind of set like really sort of ambitious targets for them to reach. And he's like, half the time he's like, well, I don't really think we can do this, but Pan thinks we can. So like, I guess we have to. And also mentioned like, sometimes they would actually sort of reach those targets as well. And I guess a really great feeling for your team members to kind of like know that, you can sort of push beyond what you think is possible with those sort of things. I had someone on the podcast before named Mark Woodland from Kismet. And one of the things that we kind of spoke about when building sort of high performing teams is like, you want people to feel stretched, but you want them to feel really uncomfortable and feel like it's not possible, but you want to set targets that are within range that they can actually hit them as well. How intentional are you with like setting some of those sort of things of going like actually feeling like they're super, super possible, even if, your team members are sort of pushing back, versus you just going, we just need to aim super high and see what happens?
Yeah, it's a really good question. Just on John T, Cal and Kevin were the other 2 starting employees as well. So lucky that we started with those 3 guys in a room, because it made the whole experience of starting the business so much easier than I think it would have been. Like today, if we hire 3 people, it's very unlikely that all 3 are going to be who you thought you were hiring when you went about it. We were super lucky that, those 3 were all absolutely guns, and love catching up with them today. It's a really good question. I think probably could spend, like, my view on KPIs generally is you can spend all your time trying to engineer them, and it's very hard to get them perfect anyway, and you're much better off getting something most of the way there, and then building a culture around the KPIs that allow people to not stray off and find loopholes in them and abuse them and stuff like that. But I'd also say what probably has helped me is that I'm naturally pretty pragmatic, and normally when I'm thinking we can do something, it's because I can genuinely see a path to doing that thing, as opposed to like, I don't think I'd ever just say, we need to do this, otherwise we're stuffed. And it's like our sales commissions today, for example, they've gone through, I don't know how many iterations, but hundreds of iterations over the 8 years that we've been around. And we still know there's areas where they're not perfect in today, but even though we know the exact area that we need to sort of work out how to plug and solve, the way to do that isn't always super obvious. On Jonty's point specifically though, which is, I think he mentioned something around like just setting very ambitious targets from the beginning. I think that's a pretty big part of our DNA. Like, there are several things, particularly on the product side of the business, where they just weren't possible to do before we worked out a solution to it. Like, we'd talk to people, even people that are in the space, like the card solution that we've got, for example. We would speak to banks, we'd speak to card issuers, and at the time that we wanted to do it, just no one could work out how to put that solution together. We effectively, I guess part of our DNA is just believing there's going to be a solution to these things, and then continuing to find pragmatic ways to get it done.
We're going to take a very quick break from this podcast to talk about one of our partners, Vanta. So if you're building a SaaS business and want to quickly unlock growth and build customer trust, one way to do this is by achieving compliance with SOC 2, ISO 27001, CPS 234, Essential 8, or other in-demand compliance frameworks. However, this process is often time-intensive and very costly. Vanta automates up to 90% of compliance, making you audit-ready quickly and saving you up to 85% of associated costs. And not only that, Vanta scales with your business. With a market-leading trust management platform to help you continuously monitor compliance, unify risk management, and streamline security reviews. You can join over 8,000 global companies like Atlassian, Dovetail, and Indebted that use Vanta to build trust and prove security in real time. As a listener of the show, you can get up to $1,000 US off Vanta when you head over to vanta.com/demo. All right, let's get back to the episode. You did mention, going through different cycles for the business. And again, someone I spoke to was Dan from EVP, one of your investors, and they invested in you sort of prior to COVID, when he also said that EVP is, I think, probably one of the most disciplined VC funds in Australia as well. He said that, they have a very specific kind of like mandate that they sort of look to invest in, and you had sort of components of that, but there was like a bit of a marketplace kind of element that was very left of center is the way that he described it. But he just said, like the numbers of the business and, the market opportunity, and they sort of understood this in kind of different industries. And, obviously the team and the execution that you guys were doing, it was just like a very, very compelling case, which obviously must have been such a great feeling to kind of have them sort of support you and belief in your investment, despite you kind of not specifically falling into the thesis. But then COVID happened. And from what I understand, and again, Dan sort of shared a blog post with me where he kind of showed some of the charts of the business. And, you guys were, again, one of the fastest growing companies that they'd seen. And then suddenly you kind of go to zero overnight. What's that like?
Well, even some more context of the story. So when we went out for our first external fundraising round, we pitched to 3 VCs. One of them was EVP. And at the time, they were like, look, this is so far away from what we're able to do. So it was a no from them. And this was kind of in the heyday, I think, or I'm told the heyday of raising money. And we pitched to 3 VCs. EVP said no at first. And the 2 other VCs provided us a term sheet, and we ended up going with one of those. So it was like, if I think back to that now and compared to the last couple of fundraisers that I've done, hard to believe that was the case back then. We ended up continuing to stay in touch with EVP, came back to them, I don't know, maybe 9 months later or something like that. And we'd just, done most of what we said we were going to do, and the business was growing really quickly. And they were, still like, oh, this is not really us and a little bit scary, but they went out on a limb and took a chance and invested in the business. And very, very soon after they invested in the business, COVID hit, and we were, really facing the worst case scenario that the business could possibly face, essentially.
What's that like on a personal level? Because, obviously there's, like you said, you've kind of done everything, or a lot of what you said you were going to do in the previous round. Business is kind of tracking up in a particular trajectory. And then there's a lot of things that are outside of your control that kind of happens. Dan, I think in the blog post that he shared with me, did mention that I think through a board meeting that you had, I think you sort of highlighted COVID, and they were like, just kind of laughed you out of the room a little bit, going like, that's not serious.
I had like a single slide on the last page of our board meeting saying, there's this, people are talking about this thing called coronavirus. It could be a problem. And this was only 10 or 15 days before the whole world went into lockdown. And still at that point, no one was really taking it so seriously. How did it feel on a personal note? It's funny, how it started and how it ended up is kind of two different things. When it first happened, it didn't feel very personal at all. It actually didn't feel like I'm a big driver for me is like, not letting people down, making sure that if I've taken money from some people, or if I've said that I'm going to do something, like a big driver for me is actually getting it done. When COVID hit and the business went to shit, it never felt like that was on me or the team. It really felt like something that was out of our control in a way that not many things would feel like that for me at all. And everyone, especially investors and the board, was very pragmatic about it at the time as well. We quickly came together. We had to make a lot of quick and very tough actions just to be able to survive. We were obviously not only growing very quickly, but we were ramping our cost base up to cope with that growth as well. And then suddenly all that revenue on the top line's just gone overnight. So lots of changes had to be made. Even an investor like EVP that had just put in a whole lot of money into the business, and very soon after that, the business looks like a completely different investment at that point. There was never a time where pressure from EVP or any other investor felt unreasonable, of all the stress from that time, it didn't come from the people that had literally just dumped what is millions of dollars into the business. And, there's a good chance at that point that the business doesn't survive because there's just been such an existential, cataclysm really. But that changed a little bit because COVID went for a long time, I think longer than what I expected it to go for. And over that time, there was a lot of people started talking about this possibility that things didn't return to normal and there was just going to be a new way of living life. And for the people that were kind of like advocating for this view, I think dining in at restaurants was maybe one of the things that was not going to come back and was going to disappear. I didn't believe that for a second and was pretty strong on that we should continue building for the business that we will have again once restaurants open up. But the longer it went, I think the more in my mind it became a possibility that maybe it didn't go back to normal, we kept going back into lockdowns. You just thought maybe this was what people were going to get used to doing. And probably that's the point through COVID that I felt the most pressure internally for myself, which was just like, have I made the right bet here? Because we probably had enough money to invest in some technology for the new world, the new COVID world. We could have done something in delivery. We could have done something, something in the contactless space. But we decided to stick at it and to continue to build the technology, which we're lucky it wasn't a new normal. And what we emerged from COVID with was some technology that, no doubt in my mind, is why the business is doing as well as it is today.
I think it's easy to overlook the uncertainty through that period because now we kind of look back and go, oh yeah, like that was a shit period for a year and a half, 2 years, whatever. But I remember at the start, especially like no one knew, like you said, what was going to happen, how long this was going to go for. Everyone thought it would be sort of a little period and it just kept going on and on and on and on. And so like maybe two questions. One is, you mentioned some of those changes that like difficult decisions that you had to make. I think you sort of let go of like 3/4 of your team and had to sort of shut down sort of your US operations at that time as well. So I guess how deep into that did you sort of start having to make those calls versus going maybe sort of things turn around really quickly?
Yeah, I want to add one more point as well. Something that was adding to that anxiety of, maybe I've made the wrong bet here, is if you look at the VC investments that were made over that time and the amount of money that was invested into certain sectors and certain businesses, it is no doubt that the VC community, who I think generally everyone accepts are like a lot of very smart people making generally really good decisions, put a huge amount of money into businesses that really could only survive or work long term if this new normal was the new normal. So it wasn't just kind of like spooks and, strange people, doomsdayers. It was, lots of smart people were betting on that being the new future. In terms of how quickly we made the decision, really quickly. Within the week of lockdowns happening in Australia, we'd started to make the decisions on, particularly on redundancies and stuff like that we had to do. Yeah, and I think one thing I remember, which was a little bit painful at the time, was there was a little bit of a juxtaposition for us because we had quite recently raised a significant amount of money, that someone that isn't as close to the financials of the business, like some of our employees weren't, particularly some newer employees, for example. It can feel a little bit like you're laying people off. We had to move some people to part-time contracts, not full-time. I think there was kind of some people that maybe thought, we have all this money and we're still like, what are we trying to just like save money? And, which was obviously never the case. Like you're not looking at how much money you have right now, but you're looking at like, you don't want to be on the treadmill just, not moving anywhere. You've got to have enough money to build a business and emerge from it somehow, and have enough money to restart your business development and marketing at the end of the day. And so I think that was maybe a little bit challenging for some people to understand why we were making such quick decisions when we'd, so recently raised a sizable amount of money. Yeah.
And the second part of that question was a little bit of what you sort of touched on, which is just the psychology of that. Like, I remember the products like Clubhouse, for example, that took off, and, classic example of things just that survived through that little period, but had this like huge virality, grew up really quickly, raised a bunch of money, and then died off pretty quickly off the back of that. What does that sort of look like in trying to predict the future of, being on the other side and sort of sticking to your guns when you've got, like you said, a bunch of really smart people and a lot of money sort of being bet in these particular things? What helped you make those decisions and like just keep your own sanity through that process?
Yeah. Well, it created a bit of a dilemma for us because we knew that we needed to keep a lot of our best people engaged and doing something because there were other opportunities for them. And I think that was one of the hardest things was once we'd brought the team down to a level that would work for us financially and we thought we could weather a period of time. I don't think we got that period of time right. I think it was much longer than that. And we did have to raise more money over COVID. But we tried the best to predict what we thought would happen. We knew who we absolutely wanted to keep in the business because these were people that were integral to us restarting the business again after COVID. And so you're really busy trying to find stuff for these people to do that's meaningful and still, they get fulfillment from. But that was particularly difficult when there was other businesses, even in a similar space to ours, that were focused on this new world, this post-COVID world, that were raising huge amounts of money, hiring like crazy, expanding. And so although I think we did a pretty good job keeping the people that we needed to keep, we, regrettably lost some people that I would have loved to keep for a lot longer because there was just greener pastures out there in other businesses that were booming, booming in a way that is hard to imagine. Like overnight, check sizes were massive. People were raising $50 to $100 million for very early stage businesses in Australia. And so, that added a challenge that was uniquely a COVID challenge because normally in some kind of global disaster, everyone's kind of leveled pretty evenly. If you think back to like a financial crisis, or everyone feels the pain. But here we really had a two-stage sort of economy. We had some businesses that were thriving and then some businesses that were totally destroyed.
Yeah. Just out of curiosity, was there any point or part of you that considered walking away?
No, I don't think there was any serious thought of that. I felt that I had a lot of faith to repay for the people that had just given us a lot of money to build the business. And I actually, if anything, I think I saw part of my job over that time of, like, part of my responsibility was just making the best of it that was possible because people had given the cash. And I guess at the end of the day, like it's great we stuck at it and we've been successful now. But if there was a world where we weren't successful, I certainly wouldn't want to feel like there was more that could have been done, or that people's money wasn't handled in the best way possible.
And you kind of touched on the support from the investors as well. And I know EVP in particular have gone through a bit of a sort of rough period recently with everything going on. But, you know, something that I think also doesn't really get spoken about is like the real day-to-day challenges of all of this stuff as well. And one thing that kind of Dan mentioned was that a lot of time when you would sort of come to Sydney, you'd sort of ask if you can crash on his couch, all that sort of stuff as well. And, you know, I think this is kind of like the reality for a lot of founders through a large part of that journey, where even from the outside, it sort of looks like you're killing it, have a ton of money, things are growing and everything's going really well. There's the reality of what that sort of looks like day to day. First of all, what was that sort of experience like for you, and what are some of those sort of lesser told stories, and maybe even just specifically talking about, you know, partners like EVP, because I think that's a side of that founder investor relationship that again doesn't really get spoken about a lot, and a lot of people just kind of look at that as just capital. You know, what does a really good sort of founder investor relationship look like? So
we've had a couple different types of investors on our cap table, some that are more involved than others, but all of them I would say have been like really positive experiences. What makes a good founder-investor relationship is a really good question, because I think there's probably lots of ways that you can go about it. It's probably, I would say, what can you do to make good and bad smoother? And that's just like be transparent, I think, and be honest. And I've definitely felt the whole way through that I was building a business with our investors and that they had a role to play in building the business as well. And I think I've also, something that I've probably learned very early on, even as a young kid, was you can never really do anything wrong, or you can never really fuck up that bad if all of the stakeholders are involved in it as well. So it's like, and I guess it's also how you manage stress as well. Like, if something's going bad, you only really, you know, lose sleep over it if it's something that you're taking on your own. If everyone really knows what's going on, it's a lot easier for everyone to run the business. And no one expects everything to be going right all the time. Like no investor, well, no sensible or realistic investor expects it to be going well all of the time. So like the more they're brought in, the easier things are. And I think you also get more value out of them as well. If they know what's happening and know what you need, they can help out. It's interesting seeing how that changes when your business is going really well and when your business isn't going well. And I think all of the investors that we had, obviously when our business was going really well at the start, you know, we would be featured in their newsletters, and you know, all their updates are going out there. When the business isn't going well, you're not as involved in that side of their business as much. You're not someone that's going to wield out at the talks and the Christmas party and stuff like that. But they were always extremely present, really thinking about how we as founders were feeling. It was all round just a really positive experience, I'd say. And I said it before, none of the stress of that period, of the COVID period, was exacerbated in any way by having raised money. That was never like that. I think that can sound like it can be a burden because you've got, you know, extra people breathing down your neck because they're worried about their investment. I think, you know, good venture capital investors know the game that they're playing, know the risks involved in it. And I think the best way to get a return from in any business situation is to be helpful and a little bit patient as well. And if it's going to work out, it's much more likely to work out if you're not breathing down someone's neck and making them worried about every decision they're making.
Sender is the OG startup accounting firm in Australia, catering to all stages of your business life. If you're busy running a business, you don't always have the time to do your own books and forecasts, and instead you can fully outsource your finance function so that you have the time and resources back to do what you do best, which is growing your business. They have a dedicated focus on founders, funds, and startups, and have an experienced team that can help you with everything from managing your tax to balancing your books to even helping with your exit strategy. I trust and use them with all of my businesses and can't recommend them highly enough. To find out more or to speak to Gareth and the team, head over to sender.com. All right, let's get back to this episode. Like, speaking of COVID, I think it's really interesting. Like, I've had founders that I've known or had on the podcast where COVID was just such a rocket boost for their business. So an obvious example is Simon Griffiths from Who Gives a Crap, where, you know, the waitlist was ridiculous overnight and just the world couldn't have come together even better in any better of a way for their product. But, you know, there's sort of other situations like EatClub of kind of things going to zero overnight. But what I've kind of noticed about the best founders through that period is, you know, these types of obstacles kind of give you an opportunity to kind of shift a lot of different parts of the business and force you to be like creative or just think a little bit differently about, you know, what is the future of this and how do you sort of, you know, having your back pushed up against the wall often kind of brings out the best results. What, if anything, sort of shifted for you from a business perspective and even like your perspective of the business overall?
Well, everything all the time has been constantly shifting. And this is a big lesson from EatClub particularly, but I think in any business is unless you're in the business, you don't know what the opportunities are. And like when you're thinking about starting a business, why you think you might be starting it, what you think's going to work, there's a good chance that that's not what works and it's something completely different that you only even know about because you're in the space and trying to build something. So I've kind of always had that mentality, I think. But there were some big things that we created over the COVID period. And I think the biggest one's probably EatClub Pay. So we took the time to like, I guess I'll take a step back. Like the starting model was we had this really flexible and granular way for restaurants to create offers on their side. But on the consumer side, it was a pretty basic experience where you would redeem an offer, you would create a time-limited digital voucher for you, you'd go into a venue and you'd show that digital voucher and the venue would process whatever offer was promised kind of through the till, through the point of sale. We knew that was a pretty limited experience. Not everyone is happy to walk into a restaurant and kind of flash a voucher around. I think even if the idea of what we're doing for restaurants and why it's a win-win for consumers as well makes sense to most people, but taking that leap and actually going and doing it is a different thing. So we knew for a long time we wanted to reinvent that experience. And the North Star was, well, what if you didn't have to show anything at all and you could be totally anonymous while filling the need that the restaurant has, which is to fill a table and generate them some money at that particular time. And so we had this idea of creating a payment method that was totally agnostic of point of sale, totally agnostic of terminal, and we could still manage all the parameters of the offer that we'd given to the restaurants, you know, all of this granularity that they needed to make the offer work for them. And we tried to do it quite early on in the business, and we were told pretty straight out that it wasn't going to be possible. But we didn't forget about it, and we kept kind of knocking on the door, kept meeting different people to work out what that solution would look like. And early on during COVID, we got a couple of green lights that we started to suggest, we might be able to do this. And it wasn't a straightforward path. Like, it's not like we just needed to build this and it would work. It's actually building several things that we bolt together that it's a bunch of process that no one's thought about putting together before to make this whole system work. It's been totally game changing for pretty much every side of the business. It's operationally far less work on the restaurant side. It's totally seamless and invisible on the consumer side. It's created a huge amount of opportunity in the payment space generally and taught us a lot about the payment space, which now we can innovate further in. Yeah, it's been a real opening for the business.
Yeah, it was one of the things that really stuck out to me when I first used EatClub a few months ago. So a friend of mine introduced it to me. I think he said that he started using it on a lot of dates that he was going on. But yeah, kind of told me a little bit about the product. And before I used it, I think I had this vision in my mind of like, oh, it's kind of like a voucher sort of thing. You like kind of flash it or whatever. But one of the things that really stood out to me was just like the level of detail and thought through each of the parts of the process of that. And like you said, I think understanding the complexity for a lot of people, it's kind of super seamless. But I think when you sort of understand all the different pieces and how they need to come together, that is a super complex piece of technology and something that you wouldn't normally associate with that. What does that look like when you were trying to, I'm sure that you've had this, like you said, this kind of vision for EatClub Pay for a while. And I'm sure that there's like a lot of different features and different things that kind of happen. You've got a limited team, limited time, limited resources. How do you sort of think about like the prioritization of different product features and those sort of things? Like, how do you decide on what the right next feature is and what the process and flow should be?
Yeah. So it's not a perfect science, and we've now post this last fundraise, going through a process of scaling the product team to probably the sort of product team that someone would expect to be inside EatClub if they were looking from the outside, but we've done most of that with a much, much smaller team. I would say prioritization it's never perfect, and we've been quite limited in what was possible, how much we could do. So it was quite high stakes. If we spent too long doing something that was going to fall flat, it would be a pretty big negative impact for the business. We build lots of conviction. I think it's a team, particularly our CTO, who's really responsible for hearing an idea from me and then working out how to make it possible. And he's really got that attitude. I think that anything is possible, and that's what we've worked with him now for 8 years. He's been in the business from the very beginning, thinking about it a lot, building a lot of conviction. And it's no different to making a bet on anything in my mind, really. What are you trying to achieve from the particular product that you're building? Why do we think that particular feature will unlock those metrics that we're looking for? And I do often think about, without over-engineering anything, making sure if we are releasing something, it's interesting enough to get the traction you want. I think there's interesting ideas in product about like really releasing MVPs really early and testing and seeing how things go. And I think that's like absolutely true, except you need the MVP built enough to have some of the secret sauce that you expect to work. Sometimes we like think of an idea, and the reason that idea is going to work is a particular part of it. Some people will want to release something that doesn't quite get to that secret sauce that you kind of imagined, and then it falls flat. People can lose motivation around the feature, and there's a lot of stuff on momentum as well that I find really interesting in product, but in all sides of the business. Like, you've got to, testing stuff is great, iterating slowly is really great, but whatever you're doing, you've got to build enough momentum around it for your staff to stay engaged with it, customers to stay engaged with it as you're building it along the way.
Yeah, I think what you just kind of mentioned there as well about not just kind of building the features, but almost simplifying it is a skill on its own. It's not just about building a feature and over-engineering it. I think especially for a consumer-facing product, especially at the scale that you're kind of doing it at, I think over-engineering something, I imagine, would have huge consequences from like conversion and what that sort of means in terms of engagement from your user base. So, like, how do you decide what is the right MVP version of a new product or feature?
Yeah. So we've got a process that's ever evolving for that, which involves everything from the research we do before we build it, the sign-off process internally to make sure that it's ticking all of the boxes for whatever stakeholders are involved, prototyping and showing that prototyping off. But I don't want to discount the element of gambling involved in it, and the element of like how people that know the business really well, whether it's founders or the heads of product, heads of the department that the feature matters for, like, you can't create a process for those people being so deeply connected to the business, and a little bit is just feeling what the business needs at that time, and having people that advocate for what they're feeling so that it does get prioritized. And if someone wants to make a bet on something like that, they're the type of people that want to take that risk, want to divert some product resource to something that they need, and then hopefully it works out, and then that can give them more confidence going forward to make more bets like that.
Yeah, I love that perspective on sort of being able to scale it out beyond just it being the founders of the team, but like really like it's across the entire business. Everyone should have ownership over that. But I also know that as a founder, it's so easy to get on the treadmill of doing things. There's a million and one priorities, just a million things to do, and kind of things always sort of vying for your attention and focus. But, like you were saying about the EatClub Pay, those types of kind of forward-looking features are really important. Do you have any sort of structure or approach that you kind of have for yourself to like take a step back and sort of look at the bigger picture, or does that come naturally to you? Like how does that?
I have a super basic process. I've got a Google Doc that I've had that same document now for years and years, and it's called the Master Strategy. And I update it 2 or 3 times a week consistently, always looking at it. New things come on, things come off. And there's some shorter term things, medium term things, longer term things. But the document's structured in a way, it's like, how do we win in certain aspects of the business? How are we going to win the consumer long term? How are we going to win the restaurant long term? how are we going to find new verticals, new opportunities long term? And then I've just got dot points and different ideas that I build out and add more to over time. And there's no times on anything, there's no dates on anything. It's really just making sure it's all in one spot, and that everything that we're doing is kind of, and you start to find connections between those things as well, like ways that one of the things on the consumer side is going to also unlock something on the restaurant side and vice versa. And I think the more connected all of those things are over time, the more the more effective the strategy is going to be.
And obviously we've referenced the cycles of the business, and we've kind of focused a lot on the challenges through the lockdown period, but you just announced a new fundraise for the company as well. Congratulations.
Thank you.
Do you want to share some more details about the fundraise itself and kind of what it enables you to do?
Yeah, for sure. So we just closed a fundraise. The total funds raised was just over 18 mil. It allows us to do a lot of things. It's our first major fundraise since COVID. It allows us to, from a structural perspective, build the business to be able to manage the scale of the future. So it's, we're being able to hire the leadership team that we want, being able to properly build out all the departments in the way that we imagined. And that involves a big ramp up in the product org. Probably the most exciting thing that we're doing at the moment is scaling up the product org and allowing us just to unlock the ability to work on more things at once. I told you before, prioritizing is high stakes, because if you get something wrong, you're not doing many things at once with a small team, and if you spend a lot of time doing something that falls flat, you lose a lot of time and momentum. So having a bit more flexibility and to be able to work on more things at once, and also to be able to work on some of the boring things without feeling like you're impacting the growth of the business. Like, that's always been a huge challenge with a small team, going back and just fixing up the little invisible things that don't really impact the growth of the business. A lot of internal tooling that we've had people doing things a long way for a long time. But then also really exciting, we've recently launched in the UK, and that capital also allows us to really fire up another market, which we're super excited about. Like, the business has been flying in Australia. If we're able to replicate those metrics in another country, I think we start to put the business in a position to start scaling globally, which was always our ambition from the beginning.
Yeah, super exciting. We might need to grab dinner in London. I think we'll be there at the same time. Pan, absolute pleasure having you on the show. For anyone that wants to find out more, say hello, get in touch. And, I assume that you'll probably be hiring for a few people as well. What's the best way for them to get in touch with you?
So we're hiring a lot of positions, and happy to chat with anyone about any of the positions that we're hiring for. We've obviously got the job ads out all over the place. I think all the classic spots, Seek, LinkedIn, etc. But absolutely fine for people to reach out to me on LinkedIn, and it's always good just to see why people are interested in working for EatClub and their experience with EatClub as well. So I'm pretty accessible and contactable at any time.
Amazing. I'll make sure I add those links in the show notes. And once again, absolute pleasure having you on the show, mate.
Thank you very much for having me, man. Great chat.
Thanks for listening to the Startup Playbook podcast. As always, full show notes from this episode will be available at startupplaybook.co. I'll be back next week with another episode, but in the meantime, if you enjoyed this interview, please don't forget to like, share, and subscribe. As always, thank you for tuning in, and I'll see you next week.